Welcome those of you in YouTube. Just getting started here. Welcome, folks. Give it another couple of minutes. Looks like people are still joining. All right. Well, I guess we can probably go ahead and get started. I guess so. There's already one question. Um, Elias or Elias, however say the name, wants me to dumb down covered calls. Um, as simply as I can put it, it's 100 shares that you own, and you want to turn around and sell a call above that break even price of your shares and take in a premium. That's a covered call. Okay, if anyone has questions, raise your hand, then I can go ahead and unmute you. I prefer you all to talk. It's easier for me to um, get through questions. All right, so Tennyson, you are up. Okay. Um, so I'm not sure how you're getting taxed from putting money into a traditional from your work. That's what you're saying? It's not auto drafting. Well, So you're supposed to write that off. You're supposed to report that and write that off. Yes. Yes. I mean, it's just tax. So think of it like this. Like, are you familiar with health savings accounts? Yeah. So, um, if I contribute, like, so my work doesn't do HSA, so I have to go get it on my own from a bank, and I just contribute money from my bank account. It's already been taxed. It's just money that I've been paid through my paycheck. I contribute to that HSA. And then at the end of the year, whatever I contributed, I report to when I do my taxes, and they that gets written off. So it lowers the tax threshold. I haven't heard that. I'm not going to say that it's not true. I haven't heard that though. I what I do know is there's a limit to what you can contribute to a Roth, for example. But as far as a traditional, there is no limit to what you make that you can contribute. So I can't imagine that there's, a limit as to which you can't write it off, right? It's still a tax, what do you call it? A tax withholding event. That's what they describe it as. So it's, I mean, I haven't seen, I'm like, again, I'm not going to say it doesn't exist, but that particular scenario, I have not heard of that. You're welcome. Okay, good questions. Danny, you are up. Yes. Yeah, until you run out of contribution, you could take 60,000 out right then and there. Any way you want to slice it. Yeah, and yeah. Yes. Yeah, I mean it's all tax-free medical expenses, right? So whatever if you have to go to the doctor or a specialized doctor, let's say you think something's wrong with your knee, you can go there and use the HSA money. You can go to the chiropractor. Like most medical or health plans don't cover the chiro. Well, I can still use my HSA money on a chiro. There's no limitation, right? So it's like that whole out of network in network BS that they try to pull. That doesn't exist for HSA. You go wherever for whatever, and it's covered. Like it'll get paid because you got the HSA, and there. Well, there's limitations as far as at 2,500. The For me, my high deductible health plan starts covering 80% when I get to 2,500 out of pocket, and then at 5,000 out of pocket they start doing 90%, and then once I've spent the maximum, which I think is 7,400, I think, is the max out of pocket. Once I've gotten to that, they cover everything 100%. So if you compare that versus a regular PPO that, when I was doing a PPO and I had me, my wife, and my daughter, and the three of us, it cost me about $520 a month. I think that's what it is. Yeah, yeah, 520 a month. Let me just do some math real quick. Yeah, 520 a month. And it increased. So I had it for 2 years. Both years it increased $15. So 520 was where I stopped. I was like, screw this. And that's $6,240 a year that you do not get to keep. It's theirs. If you don't use it, you lose it. Well, with a health savings account, if you don't use it, you keep it and you build it. And if you can continue to build it your whole life, you have a you can start withdrawing from it just like a regular or a traditional IRA or a 401k. You can start withdrawing from it and pay tax because the money's tax free, right? So, by retirement, if you don't need the account no more, you got a lot of money, you're living well or something. Um, no, you do. If you take it out as in like a 401k, like you get to 59 and a half and you start withdrawing from it like a pension or something like that, you pay tax on it then. But if you're spending it, for whatever medical expense, does not matter as long as it's medical field related. You can, like, I get eyeglasses with it. It's covered. Yes. No. So I get to write that off just like a traditional IRA. Yes. No. Nice. Yeah, I mean, if you can buy it from them, yeah. Well, that must have been like an FSA. Because if he has to use it or lose it, yeah, that's definitely FSA. Because HSA, it stays flexible spending account. So there's a maximum contribution of 2,500 a year, and you have to spend it or it's gone. You're welcome. Okay, who's next? Feel free to raise your hand if you have a question. I'm gonna go through the chat here and see if I've if any outstanding questions exist. Joe Mama asked about um, thoughts on leaps. Is it better to be out of the money or in the money? I don't like to be in the money. if I'm just naked call leaps, I like to be at the money, somewhere around at the money, wherever the open interest is highest. Benny wants me to talk about STO and BTO. Um, that's a big subject. Is there something specific you want me to just describe STO and BTO, or I'm not sure. Like that's a very large subject, so I'm not sure where you want me to, which direction should we go in there. Let's see. So I'm just reading through here. Please do raise your hand if you have a question. Um, Benny is asking how to roll a contract after selling to open. What broker are you on? I'm gonna, okay, so Webull, unfortunately, you can't do it the way I can do it, which is just right click and do it. You got to actually close out the contract and get into a new one. So whatever you close out the contract for, you've got to get in the next one for more money. That way, the credit, that's your credit. That's the additional amount for the position. Okay. All right. I'm gonna go to Yash first, since Danny, uh, this would be your second one. So go ahead, Yash. Yash. You, so you were kind of going in and out that whole time, but I'm gonna guess at what you were saying here. You were on Robinhood. You traded too many times. Now they've locked your account for 3 months because of the PDT rule. Well, I don't know. To be honest with you, I'd get off Robinhood and get all your money out of there and get into something else. I mean, there's a few options. You could do Webull, E-Trade, Schwab, Thinkorswim. You know, those are all good options. I think the easiest one I think is going to be Webull because you're on Robinhood and there's no charting, so you have to start learning how to do that before you try to get into a more complex broker. I use Thinkorswim. Yeah, I'd recommend getting off Robinhood. It's a trash. It's a very trashy broker. You're welcome. Okay. All right, Danny, back up. Okay. I think you have to go on the website to do that. Hmm. And if you find it in the online one, then there's a chance that you can find it on the regular mobile one. But if you don't find it online, then anything online, I believe, would translate to the other TDA regular app, not the TOS app. All right. Okay. Coach Eddie, go for it. Yes. Are you talking about through a mobile phone or what is IBKR? I don't know what that is. Yeah, I don't know. Like, there's always some kind of disconnect between American and U.S. brokers, and even UK. It's always something's like I- it's not a one-to-one um, correlation, if that makes sense. So when you ask about IBKR, like I do not know. And when you say that you tried Thinkorswim but you couldn't find it, um, that's um, look. How about this? Download. Oh, shoot, you need a social security number. Yeah, I don't know. I'm thinking, man. I don't. There's there's a couple of people. I don't try to think who they are that are in Canada that trade. Um, I could always. What's your Discord name? Corso. Oh, okay. Let's see. Let me find. Yeah, okay, I got it. All right, so um, I'll shoot out a blast and see if there are people here that are in Canada that trade, and maybe try to link you with someone that is in Canada that can help you. Okay, let me write that down because I will forget. But if I wrote it down, I got no excuse. Okay. Dennis, if you could what's your what's your Discord name? Oh, okay, DC. Yeah, yeah. There you go. So yeah, DC, message this guy on Discord. Ah, crap. I got it. Oh, there you go. Send him a message if you would, please. Okay. Did you have any other questions besides that? Uh, Coach Eddie. All right. Cool. Okay, Carlos, you're up. Hey, okay. What about it? There are no indicators that will tell you that, unfortunately. Uh, with 10 plus years experience, yes, you could probably look at the chart and tell that. But being new, you're not going to find a silver bullet. You're not going to find something that's just going to instantly give you profits. It doesn't work that way, unfortunately. No, I wish because I'd be rich. I'd be a billionaire. Oh, no worries. Okay. Um, who else has questions? Oh, okay, Tay, go for it, Tay. What kind of option trade? Okay. So for day trading, I would say 5 day, 15 minute is the best one. But sometimes looking at the 1 day, 1 minute also works. But I wouldn't do any trading off of the short time frame. I'd only do it off the 5 day, 15 minute if you're going to daily scalp. Well, I don't trade that way. So, and when I do, I lose money. So I don't know if me giving advice on daily scalping is the greatest. Um, what I can tell you is there are signals that, like Tilio, for example, he certain things have to happen for him to get into a trade, and that's what you have to figure out, right? I would say to maybe just at the question bot, ask Tilio, something like that. I mean, because unfortunately, I don't trade that way, so I don't give. It's hard for me to give advice for something like that, if that makes sense. I sell options. So I sell cash secured puts, and it's a bullish position. It's basically the same idea as a call, I guess, except I'm shorting a put right? So if it's at support and I short a put at support, I want the price to go up, then I make money, right? Well, that's the thing is for this particular type of play, you're actually so if I sell a put at a 30 strike, I'm actually committing from my account $3,000, right? Because it's there. The reason it's called a cash secured put is because if it goes against you, you own shares, right? So that's the collateral that they require. Now, if you're doing a naked sell put, that's different. That's when margin calls happen. That's when, if you're not if the object or the objective is not to do a cash secured put, then you'll be in a naked option selling position, and that's not where you want to be. That is unlimited risk, right? So if you don't have something protecting you from downside, it becomes um, a negative or an infinite risk, right? So that's why I like cash secured puts because it kind of is a call option in a way, because I want it to do the same thing you want it to do with the call, right? I want it to go up, except I don't necessarily lose money, right? If it goes below the 30 strike and expires in the money on me, then I just own the shares at whatever the price is of the stock at that time, right? Plus the premium that it paid me. So I got to break even, right? So if I get paid $500 premium on a 30 strike cash secured put, my break even is $25. So if I get assigned shares, they're worth $25 to me, not 30. It's a much safer strategy. I mean, you could do this for day trade, but it's the thing is with this, you must have theta decay. Theta decay is what's going to add value to your position, right? So vice versa with option buying, like what you initially asked about, theta decay hurts you. It erodes your contract's value. Whereas for me, it does the same thing, but I sold it. So for me to get out of that position, I've got to buy it back. So I want to buy it back for less than I sold it for. So that's what theta decay does for me. It erodes the value of the contract so that when I go to buy it back, it's worth less. So I keep the difference that I was paid, right? You're welcome. Okay. Um, mm, Mikey, you're up. Mikey. Uh, just give me one sec, guys. All right. Sorry, give me one more second. I'm not sure who was next, so I'm just going to start with the person at the bottom, um, Peleus. Uh, Elias. I think it's Elias. All right. P4 then. Not too much. Um. So I used to say that I would hold it, but every time I do, every time I tell myself I'm gonna hold it all the way to the end, it's usually not a good thing, right? Like right now, I held all the way to the end on some stuff that I could have made money on every single position. I could have made 2 grand probably, um, had I just dumped it at their highs, mind you, as far as because I had Theta Decay working, it was doing me work. I had been sitting on it for 2+ weeks, so I had pretty good Theta into my position, and then it pumped one day, and I got everything looked beautiful, like 80%, 75%, 65%, stuff like that. I didn't take any of it because I wanted it to go all the way to the end. Well, I went all the way to the end. Now I'm down significantly, and I own shares. Right. So I think, long story short, it's better to um, flip them. Like when if you've been in a position for a week or two and Theta's done its job, and then it does a pump, and let's say you're at 45, I'd say my rule is 50 to 65% profit. That's where we're going to start taking it, right? I think it's yeah, that's great, right? Which one is it? Sorry, the ticker. Disney and pins, and that expires a year from now. How long you been in it? Okay. So I mean, I would say by May, June, that position will at least come back and show you a little bit of profit. That's when you take it if it hasn't done it sooner, right? I'm in an Apple call, a leap, and it's a 140 strike. My break even um, price when I entered and averaged down, mind you, right now is at 132. So if the stock price comes up to 132, I can get out break even. So I need, and I'm in the same time frame with Apple. I've got January 2022, so I need that to come back to life, and I believe it will. I believe it will retest its previous high in the next 2 to 3 months, and at that point, I'll be in the money and be making money, right? So I believe the same thing will happen with pins. Let's see. Let me just glance at that real quick. Hmm. Oh, did it fill? Did it fill? Yeah. Well, so I'm gonna share my screen real quick. I don't mean to be. This probably isn't gonna be what you want to hear. This is short term, so I would say maybe have that in your mind, right? Can you see my screen? So That's a gap. That's funny. Right. I think that person is um, the other one that likes to fuck around. Yeah, so while I figure out which one of these people is the fake one, yeah, take a look at how the. All right, let's see here. Coach Eddie that I asked to unmute, are you the real one? No? Okay, you're not. Zoom is such a pain in the ass whenever I don't have full control. Hopefully I got rid of the right one. I just feel like they can keep coming back and doing the same dumb shit, right? Make me start going back to Discord and doing this through Discord and YouTube, because then this person won't be able to do that. I'm pretty sure this other one is this Bellin is the fake one too. Yeah, it is him. Yep, thought so. Okay, I think we're I think we're good now. Let's try again, shall we? Um, who was it that was asking the question? Sorry. Raise your hand again. Oh, there we go. There's another one. Awesome. Love it whenever people got nothing better to do with their time. I'm not even sure, like, shouldn't I be able to not allow people to even write on the screen? Let's see. It's pretty bad when I have to do this, guys, right? I have to figure out how to prevent idiots instead of actually help teach people what they want to learn. I think we're good though. All right, so the person that was talking about pins, I would expect this gap to get filled, but once it does, you could potentially just um, let that be the average down. If you've got the cash or capital, maybe average down right there on the same position. The leap that is. Let's see, how much does that even cost? Not too bad. It's going to be even cheaper. If it comes down to, what's that price point? 49. 600, 700 maybe. $700, $800 is what it would be worth. There he is again. Well, this is why these are so awesome. I love it. I can't prevent the dickhead from coming back. Sandy, I'll try that. Give me 1 second. Let's see. I think I have to be sharing my screen to do that. So here we go again. Disable attendee annotation. Let's figure this out. Oh, there you go. Thank you. Hopefully that worked. Yep. Awesome. All right. We can move forward, I guess. All right. So let me just stop sharing so I can see who's got their question or their hands raised. Um, I'll just start with P4 again. Oh, gotcha. Okay. Um, those are diagonals or calendars, depending on where your strikes are. They're okay. They're not bad. I mean, that's a good way to lower the cost of it, right? But the catch is you need the stock to be pumping. You need it to do a pump somewhere, so that you can sell a call against the leap. And the call has to be higher than the leap at a minimum, or even, right? That's a calendar. Right. Yeah, no, that's definitely a pretty good strategy. I've done it before, and I will do it with Apple once I get a good pump in there because I've got the Leap on Apple, so I need to start getting some of my theta back here. So that's a good way to lower your costs, right, or keep up with the loss of theta. Yeah, I don't like capital being tied up either. But there's some things out there that I would buy shares of, right? And like Fastly, right now, I'd love shares at $65, and so calls on it because that's a $100 stock, you know. So that's an easy $3,000-4,000 in premium and value in the shares. And there's no telling how long it'll take to get back to 100, but I know it will. So it's a matter of selling calls against it every time it pumps, and then when it falls, you get out of the call, and then it does it again, you get back in, that kind of thing. And hopefully, every time you do it, you're raising the strike price of your short call. That way, your stock share value rather goes up as well. That's really what you're after. You're welcome. Okay. Um, Elias, is that how? Yeah, is that how to say your name? Okay, got it. Okay. Yes. So if it doesn't go past the strike, as in the money, you keep majority of, if not all of the premium that you were paid plus the shares you retain. and you still keep the premium. And it, yes, there's a difference in price. I mean, if you so if let's say your break even is 25, but you sold a 30, that 500 in between is profit for you. So if it takes your shares at the 30 strike, you made 500 plus whatever premium that you got that you were paid, right? So if you were paid to say 200 premium and at the 30 strike, your overall profit is going to be 700. Say that again. Sorry. Yeah, you are. I was getting pinged at the same time, so it kind of got my concentration. Yeah, yeah. So I mean, you want to get the shares at a lower price point and then try and chase the stock price up with your short calls, right? So as the price is rising, you get in it, you get in a short call, and then let's say it has a pullback, you get out, and then it pumps again, especially past the point that you initially did a short call. So let's say, for example, you started at a 70. Um, you got in, stock dropped, you got out with profit, and then it pumps to 73.50. You do a 75p or 75c now. Right, so you sell that 75, and then it falls down to say 71. You get out of that 75, and then it pumps to say 77 and a half or 78. You sell the 80, right? And at this time it doesn't fall, it pumps again to 82 and expires in the money. You went from 70 to 80, so that's $1,000 plus the premium that you flipped multiple contracts for, right? So that's ideal scenario. Following the stock price up and calling away the shares at a high value or at a higher on the higher end of the stock price, if that makes sense. Yeah, so when you're option selling, you sell to open a position. So you sold a contract to get into a position. So to get out of that position, you have to buy it back. Stock price drops rapidly and you're in shares and you can't sell short calls against it because it's too low. Cool. You're welcome. Okay. Um, James. All right. Ben Jacob. How the fuck does this cocksucker have so many goddamn Jesus Christ? Fucking worthless. Life. Have zero life. All right, let's try Joey. Let's see if this is a real person or not. God almighty. I mean, I'm not even sure how to like Zoom doesn't force people to put emails in and shit. So it's like uh, whatever. Okay. Well, I can show you one that was really quick, and I can show you one that I'm in right now that I'm waiting on. So let's see. Share my screen. All right, let's see here. You can see my screen, right? I turned it off, so hopefully it works. Yeah. So let's see. This one I got out way too early, but the expectation was not this huge ass rip. So I got in at 1875, and I think it was 2 days later it did the pump up to 23, and I got out, right? Because over here you see these red lines. This is resistance points. So I was expecting it to potentially just pump up there and then and hit resistance and fall, which it did, and then it shot up like crazy. I was Yeah, I wasn't expecting that, but I was expecting this to do this pullback, so that's why I got out here right at market open. Okay, so that one was Rocket. Now I'm in PLTR right now. Let me go to my other broker and see what my break even is first. Just give me a sec. Guys, there's no need to respond to that idiot in there. Just leave him be. Seriously, let him run his mouth. He's seriously paying $50 to do that. I mean, it's beyond me how that's even like people are. You could go play a game and have a subscription to a cool game for $50 a month. All right, let's see here. PLTR. Our break even is $24.18. So but here's the thing. For this, I had three CSPs and I averaged down 100 shares at 22.50. So I've got almost 10,000 in this position. I had a CSP at 30 and I had two 25Ps. And the reason I had got the 25Ps is because I couldn't get out of the 30. So the only way for me to get that average price down was to just get into more, which is what I did. Well, I couldn't roll it. It was the premiums where it was too far away. Um, yeah, so the rolling was kind of not an option. I had the choice to a few times, um, but I didn't take it. This is one of those that I was telling. I think it was you that I was telling him, maybe, or someone I was telling here. I had multiple CSPs and I could have got out all of them for profit, but I didn't. This is one of them. So once this hits, I'd say somewhere up here, 26, $27, I'm going to sell a 30p on it. Um, so once it, and again, what I'm hoping it does, it hits this resistance point and it falls. I'm going to get out of, and I'm going to be able to get four contracts here. So, I'm looking to try and recycle this as much as possible. My goal to let the shares themselves go is somewhere around above $30, so 31, 32. So I'm not going to be able to say, at a specific time or price that I can just get out. If I'm in calls, I can't just get out of shares. I've got to get out of the calls first, right? So the goal is above 30. So once it reaches 30, then I'm going to be looking to get out of those 400, right? But I'll be selling 30Ps on it until then, Right? A 30p is the initial price point of my first contract. So this guarantees me the premium that I got for the CSP plus additional premium on top. So right now, I can't sell covered calls on it for April 16th because the 30p is, I mean, I guess I could, $26, right? But I'm waiting for a pump. I mean, if it hits 25, I'll probably sell 30p on it because 25 is looking like, triple that. So um, if I did four of these, I'm getting 75 times four. That's a pretty good premium as far as, you know, this being there, right? So, and if I get that plus the 30p, I'm really going to be making a lot of money here, right? So if my break even is 24.18, um, let's just say 24, make math easy. That's $600 per 100 shares. I've got 400, right? So that's 2,400 just in shares, and then I'm whatever premiums I'm taking in, right? So I guess the initial CSP premium is baked into that $2,400, whereas once anything I sell now from this point forward on calls, that's additional to the 2,400, if that makes sense. No, I don't track my stuff. So here in my mind, whatever I do, it's always gonna be, it's always gonna put me in the position where I don't lose money, right? So whatever decision I make, number one, patience is the top of the list. Have to be patient because if I'm not patient, I'm gonna lose. And the plays that I get into and the positions I get into, they are they won't let me lose. Like if I sell cover calls at the 30p, I don't lose. I make money, right? Um, so I don't need to track my stuff because I know it's always going up, right? And as long as you remember the price you got into or got in at, right, and you always sell above that price, especially with shares, because it's, I mean, you don't want to get in at highs because then you're going to be waiting around a while, right? And you're going to have to start averaging down, and it's going to take significant amounts of capital. But um, if you're always selling out of positions for higher than you paid, or everything, if you're making money and the positions you're doing are going to guarantee that you don't lose, then I don't like. I just look at the account from every month. Like let's say the account this month is 10 grand, next month it's 11,500. Um, every month you can do that, and then by the end of the year you can go with something like um, my account went from 10,000 to 20,000, so that's 100% return, right? So I don't necessarily look at dollar amounts. I look at percentages. The percentages are more important to me because if I can make 100%, it doesn't matter how much money I've got. If I'm making 100%, if it's 100,000, if it's a million, or if it's $100, it's still 100%. And if you've done 100% before, you can do it again, right? So does that answer your question? Okay. Okay. No problem. Well, I'm guessing Sherlock Holmes is another one of those people here that want to be a pain in the ass. Uh, but I'm gonna give you a shot and see. Okay. So I'll use Apple since I know it's at a low right now. So Apple, first I look at the chart, go typically the 180 or the 1 year. So right now it's still in an uptrend, right? Um, I'm gonna go back to the 1 year just to see. So I'd, give me a sec. I gotta chart this out a little bit more. I'd say that's pretty decent. So 119. Stock price is at 120.59. 119 is support for this, I would say. So I would go into option chain. I'd look for the 119 strike. Um, OI is okay. It's not too bad. I mean, 1,000. No, I don't really care about delta. Phase likes delta. I think phase goes for 30 deltas, which is this one, the 116 and a quarter. For me, I look for support specifically. If it's on 119 support, I will get a 119 support strike. I don't care about the delta. Anywhere from 20 to 45, I think is just right. Another thing that, so I would not trade this. I would not do a CSP on this. The reason for that is um, for the leveraged amount of capital that I'm gonna have to put into this, which is 12,000, is the premium received is way too low. Right, so 315 divided by 12,000, that's 2.6% on my leveraged capital. Right, so 12,000 is leveraged capital. I'm only making 2.6% on that 12,000. That's not enough. I need around 10%. You're welcome. Okay, let's see. Good questions. Herbert, yes. No, I think it'll just close out the contract and give you whatever it's worth. Yeah, no, I mean, especially if you don't have the capital for it, right? I mean, like, let's say you're doing Apple, but you've only got $1,000 and you're doing a play that's at the 121 strike for 335 bucks. There's no way that you would be able to get that. They're not going to force that on you if it's not in your account. Um, yeah, only if you've got like a margin. So that when well, the difference is that with a margin, even then there's protection, right? Because if something goes against you, they do a margin call. If you can't fulfill that, they're going to close out that position, and then whatever the difference is, you owe the broker that, but that's it, right? So, but if you were to fill that margin call, then it's going to give you more buffer room on the downside, for example, if it's going down. Um, and if it continues going, there's another margin call, and you don't fulfill it, they're going to close out that position, and then whatever you owe is going to be, you won't be able to trade until you pay it, right? So there is protections when it comes to infinite trades or naked trades. They do require those margin calls. So, and they give you 24 hours. So, I mean, I guess in that 24 hours, if it really tanks, you're going to have to probably come up with that cash, right? So just a brief explanation of a margin call, account. Um, well, if it's in the money, your contract's worth something, right? But if it expires out of the money, then it can be worthless. I haven't. I don't buy options really, so that's not something that I'll encounter. You're welcome. Okay, let's see. See, Caesar. I think it's funny. He's trying to irritate me, but I think it's hilarious. Is it Jacob too? Jacob, are you a real person or are you the same guy? Oh my God. I tell you what, I had no way to prevent this fucking twat from ruining this. On Discord, send me a message if your hand is raised so that I know that you're really, and tell me what your name is here in Zoom so I can make sure I don't give this kid the time of day. I think viral is real, so I'm gonna definitely let him go. Yes, of course. No, you don't get to write off a Roth contribution because it's after tax dollars. So the benefit is that whatever money you make, all your profits in that account. So like if you got 6 grand and then you make 6 grand this year, the 6,000 you make is tax free. You can't touch it until 59 and a half, but it's tax free. So you get to withdraw it at 59 and a half and not pay taxes on it. You're welcome. I would max out 2021 as soon as you can as well. And I'll say that if you're married, you should do one for your wife too, so you can double it. Awesome. Got it. Awesome. You're on the right track. Okay. Let's see. H HID. I'm gonna say that. HID. Hid. How do I determine I get a low price, like as far as the stock? Well, as far as premium goes, like okay, so I did that calculation with a calculator where whatever your leveraged cash is, so let's say your leveraged amount of money is $1,000. Um, to get a 10% premium on 1,000 is 100. That's what I'm looking for. I need 10%. So if I got $1,000 leveraged, I want to see $100 premium. So does that answer your question? Oh, there. Should be able to talk now. Oh, why would I choose PLTR? Well, it's just something. Well, I was gonna say that it's just something on my watch list that I trade periodically, right? I mean, like I don't. I will only trade it, or I'll only do CSPs on it when the premium's good. When I got that 10% premium, but if it doesn't, I just kind of cycle through the rest, right? I mean, I've got all these tickers that I typically pay attention to, so if something that isn't doing the premium's not good on something that I'm looking at, then I'll move to something else. And I'll just keep trying to find things with good premium and at support levels so that I can get into them. Does that help? Yes. Yes. As long as the premium's pretty good, um, I will choose a support CSP over a good premium CSP any day. Right. So if I can get in at support and the premium is say 7.5% or 8%, I'll take that. It's okay. I'm down with taking that because the support level is really strong. Right. But if it's like a okay support level and it's paying me, 12 or 15%, okay, I'll probably still take it. Right. But there's a reason why the premium's higher because there's a chance it could go lower, in my opinion. So anytime premium is really high, that's just kind of an indicator that says that um, there's volatility. So be aware of it. You're welcome. Okay, JG. So what I was showing the person was a cash secured put or a covered call. It wasn't what you're talking about. Um, but what you're talking about, uh, typically when you're trying to find, like if you know you want to get into something, you like the charting, you like the analysis and all that. Now you're looking to get into a position via the option chain. The first thing that I look for is how close to at the money is their open interest, right? And if that open interest, so I'll share my screen real quick. So you can see the screen. All right, so here's an example. Let's say I was bullish on Apple and I want to get into it. I like the current price that it's at 120.59. Let's say that's support. Well, then I'm going to come on the option chain and we go, all right, where's my open interest? The closest great open interest to at the money is going to be this strike, the 121 and a quarter, 15,000. right? I don't really want to do the 751 because that's just not a lot. I mean, it'll probably still work. You can probably still do what you got to do on that strike. It's just it's not going to be as liquid. So I would go with this one. And then I look at the bid ask spread and say, all right, how wide is it? Is it really tight or is it really wide? I like tight spreads because they show you that the ratio of buyers and sellers is pretty equal. All right, so that's something important. So those few things is how I would choose a strike on an option chain. Is it still there? What? I mean, that's not too wide, 50 and 65. I mean, it's not the greatest, but I mean, you see everything else is relatively similar. I mean, this one's 5, this one's 8, this one's 3, this one's 4, right? So I mean, but the size of the contract changes as far as the percentage of difference in bid ask. Um, yeah, you want to get as close as you want to get as close as you can to at the money that you can afford. The purple is in the money. Yeah. Well, the stuff that's black, the black background, that's out of the money. That's all that is. That's all this show represents is call side over here on the left is out of the money in black and in the money in purple, and then put side is black is in out of the money and purple's in the money. Right. So the if you're buying a put or a call, you want the stock to go in the direction of the black background. Right. And if I'm selling um, either side, I want it to go in the purple direction. No, I lose money with that. I'm not. I don't have the time. I don't have the patience to like. I don't have the stomach to watch it fluctuate the way it does. I can't. So the stuff I do, the fluctuation, if there is major fluctuation, it's typically a good thing, and that's when I get out of a contract and then wait for it to fluctuate the other direction and get back in. If you go to my channel, I have something there called the wheel strategy. It talks briefly about cash secured puts, and if you get assigned, you sell covered calls against the shares. So that's the whole entire strategy, right? I think that'd be a decent resource to watch. I have been meaning to make videos just strictly on each strategy individually, That way, it's easier for people to grasp before they start trying to understand the wheel strategy. It's just on the to-do list. So, uh, yes, yes. Yeah, of course, you're welcome. Hopefully, you're using Thinkorswim because that's the broker that I use. So, if you're using that, it'll be easier for you to relate what I'm doing. He does E-Trade. Tilio uses Thinkorswim as well. Yeah, a lot of people use Webull as well, but that's more for option buying and shares. If you're doing selling like this, Thinkorswim is probably the better choice. Because if you have to roll a position, Thinkorswim does it very smoothly, whereas Webull, it's it's you have to do it manually. That can be a pain. All right, you're welcome. Okay, let's see. Not sure who was next. I think Ollie. I think Ollie and then Josiazen. Josiazen. I'm not sure how to say your name, but Ollie. Yes. So I think you have your terms backwards. A regular split, you get shares added. A reverse split, they get taken away. Okay, so when you're in a contract, they typically will tell you that you have to be so like the reverse splits, they did four shares, so you would have to have an equal amount of shares to where you could divide four into it and be even, right? So 40, you'd need 40 shares or four contracts, right? It'd have to be some kind of equal number like that to where when it does the split, well, they're not going to make you do anything. You have to go out and do it, and if you don't do it, you're going to probably lose a fraction of that 10. You would lose the two. But I'm sorry, that's with a reverse split. With a regular split, it takes your share, divides it into four, and it basically multiplies. So if you've got four shares, now you've got 16. That's a regular split. So that gets tricky because I always recommend nobody hold an option through stock splits. Okay. Yeah, it gets tricky. There's rules, there's specifics like what I was saying. If you, I mean, I guess with options, you can only, I mean, so if I divide four into 100, it's not going to be an even number, right? So that's what makes it weird and tricky because, 100 divided by four I'm sorry, is 25. So actually, yeah, the contract would be fine, right? Um, as far as the pricing goes, I'm not sure, man. Like, yeah, the only preparation that I can honestly say is to not be in it when it happens in a contract. But beyond that, I mean, I'm guessing if I try to tell you what the pricing of the contract would be. It will, yes. The strike price will move around. Right, yeah, and so the strike price will move, and that's going to affect the value of the contract. It's frankly going to mess it up. Um, there's a way out, though. I'm just not sure what it is, and I think the broker would send you a notice if there's something that you need to do to um, with your contract, right? I mean, uh, it just depends. I've been in the position where I had a contract and something split, and but it was just a little lotto, cheap little lotto, and it split. The stock price went from like 12 to 30, but my contract stayed the same and really never did squat after that. So, that's why I recommend people not mess with or be in a option contract when it doesn't split because I think it's a high risk of loss because the data gets lost and yeah, and it's hard for the option chain to adjust. I mean, unless it's a big one like Apple or Tesla, those could survive. Like your contract would probably survive through a split, but other types of tickers may not survive, especially if you're not right at the money. Because if you're right at the money, then you're basically the equal even price. So it's easy to transfer that over because it goes one to one with the stock price. But if it's like a far out of the money or in the money, then it's different. You're welcome. Okay. Josiah Josiahson, how do you say your name? Okay. He's not responding, so oh, okay. Well, it depends on the strategy. I mean, you talking about buying options? Not really. Try to stay away from that. Yeah, I avoid the spreads too. There's too much risk. I mean, it doesn't matter how much money you got in there. There's always risk to lose more. Um, Well, when you compare it to that, yes, it's less risky. But when you compare it to CSPs and covered calls, it's more risky. Yeah, so I choose the thing that's the least risky, that's going to give me consistent returns and be safe for my IRA stuff. You're welcome. Okay. Um, Reneel, I think is how you say your name. How do you say that? Reneel. Okay. Definitely not instant gratification because that typically ends in instant loss. Um, if I buy an option, I go for leaps, and when I look for a leap, typically I look for things that have gaps in the candles on a 1 year, 1 day chart. So if I see a pretty decent sized gap on something, and the stock is headed downward, I look for that gap to fill, and then I'm gonna probably jump into a leap. And when I say a leap, I like a year out, 8 months to 12 months. I don't care about Greeks. I only care about open interest in that scenario. And typically, if it does fill a gap, it's doing it near support. So also another really good entry point because it's at support, filled a gap, and now it's going to be looking to have strength, and that's when you want to get into it. And even if I get into a leap and it shows me 10, 15% return on a $2,000 position, that's a pretty decent return. So I'll probably take that. Even if I think it's going to go higher, I'll probably take it because from my experience, I always see some kind of pullback before it jumps again. Right. So I'll take it. Hope that it does a pullback. If it does, I'll get back in, hopefully cheaper than what I paid. And then the next pump's going to pay me double what I just made off that first one. Typically, is how that works. So keep that in mind when if you're looking to do leaps. That's the strategy that I use. I don't do anything short term like what you're talking about. That's just too risky for me. You're welcome. Okay. Um, Johnny, hey. Okay, so what's your break even? You'd have to do the $6 strike. $16 on the 16th of March. No, it's not worth it. Honestly, probably would never sell options with this stock. Yeah, I would just, I mean, once you get out of that with those shares, then I wouldn't even consider doing options on that. Oh, gotcha. I mean, well, the thing is that you got to pay attention to here is, you got, let's just say, for example, that you went to at the money, you did an at the money call, right? $5. So that's 500 bucks. So you would get 41 for that position. That's only 8.2%, right? So if at the money is not 10%, then the premium on this is trash. Must minimum, yes, must minimum be 10%. I like it more. I think 15% is better because then that means 10% is going to be a little bit further down the line, if that makes sense. A few more strikes down. Yeah. No, of your leveraged capital. So at the $5 strike, you need 500 to get in. If the premium paid to you is less than 10%, it's very not worth it. You're welcome. Okay, good question. All right, HID, you're up again. It's not about how long it runs, it's about how quickly it gaps from one point to another. Okay, so when I look at a gap, here I'll share my screen. This is one of my favorite gaps that I made money on a few times already with leaps. So I drew here. That's a little bit. So this, as you can see over here on the far left, I've got the gap drawn from roughly the body of this green candle to the body of this green candle, right? This thing in the middle, I would not call that a body, just a bunch of wicks, so that does not count. There must be a body in between this gapped area. All right, so when this stock pumps up, you see it took let's see, 10 months, or I'm sorry, 9 to 10 months to fill that gap, right? This is one of those things where if you see something coming downward, right, then you're like, okay, at some point it's getting near that gap. At some point it's going to fill it. Now here's something else. The same stock, there's a gap on the upside. It just created. So it will fill this. I'm certain of that. This gap will be filled, right? And that's up to 204. So I mean, at what point does it fill? I don't know. Um, the thing that I'm watching with Clorox is if it comes back down under 184, that's a good entry because I do expect it to feel this. And each time it bounces above the most recent high. So, it did it here and then it did it again here. So, and it's going to come back down, I'm sure, but it might not hit 184, but at some point it's going to fill this gap, right? So I don't, yeah, yeah, I'd probably buy a leap at 184, 185 because that's where the support level is, and this is a new trend up, right? It's trending upward, so I'm pretty confident that this is going to continue to trend up. Um, and the support level right here is 184.57. All right, so if the stock comes down to that, that's a good entry because I believe it's going to bounce off of that and then head into this gray area somewhere. You're welcome. Okay. All right. Steve, you're up. Yes. Pretty good.